Traders and investors, welcome back to the Trend Trader channel. So in today's video, we are not talking about the stock market per se. We just want to speak about the interest rate. So today we saw that the governor of the Reserve Bank came to make the announcement that the Reserve Bank has decided to increase the interest rate by 0.25%, or as the other wise people call it, 25 basis point. But 25 basis point is equal to 0.25%. So now the new lending rate from the Reserve Bank is sitting at 4.25%. But as we know, as consumers or retail people, we don't necessarily get that interest rate. The interest rate that we are mostly interested in is the repo rate, or whatever that they call it, or the prime lending rate from the bank. So the prime lending rate has now increased to 7.75%. It's an increase from 7.5%, right? So what does this mean to you as as a consumer? It means that the interest that you are paying wherever you have a loan where you are paying interest, it could be home loan or it could be a vehicle asset finance, then you can expect that your bank or your banker is going to contact you and tell you that they are adjusting. That is if you have an interest rate that is variable, meaning that whenever the lending rate changes, also your interest rate it changes as well, right? So just a quick recap: the interest was 4.25%. Now the interest is 4.5%. Then the prime lending rate, the one that you are getting from the banks, is now 7.75%, all the way from 7.5%, right? So, and then I said that if we are if you owe creditors, then it means that you'll be paying 0.25% more in interest that we are paying. But I know you guys, you are traders, you are investors, you are savers. So we expect that the interest rate that you are getting in our savings account is also going to increase by 0.25%. I know that that increase sometimes it's not the best increase that you can get, but as you know that it is said that it's either you pay or you receive interest. So if you're in the position that you are receiving interest, then it is good news for you. Unfortunately, if you're in a position that you are paying interest, then it could be bad news for you. So that's all that I wanted to share with you. That the interest rate increase from the South African Reserve Bank. For those people that are trading CFDs, you know that whenever you take a position, you put in a small margin and then your broker funds the difference. For example, if you trade equity CFDs, the typical leverage there is 1:5. You put in 20%, then your broker put in 80%. So this increase in that prime lending rate is also going to affect the interest rate that you are getting from your broker. But also remember that if you have cash that is sitting in your account, that cash does receive a bit of interest. It's not the best. If you read there's a cost document from different brokers, you will see that it's really not much, but well, so I guess something is better than nothing. So yeah, it's something that you need to keep in mind. But now the inflation, I think in February also, the inflation was sitting somewhere around 5.7 or 5.5%. So if you are getting an interest that is less than 5.5%, personally, I don't see a reason to have cash sitting, especially cash sitting in a stock brokerage account. I know that I also tweet that cash is a position, especially during a market reversal or a market correction. Sometimes there is no need to stay invested in shares, but there are other things whereby you can take your money and put it there so that you just beat inflation, because it's not always about staying invested. You can't invest in a crashing market. Fortunately, the market is not crashing, but you can't stay invested in a crashing market. And also at the same time, now, given the inflation rate, you don't want your cash to be just sitting there idly, unless you are saving for emergency savings or other short-term obligations that you're going to need that cash in a shorter period, right? But as you know, guys, this is not a financial education channel, but we just decided to take this opportunity to share a bit of how this can affect you as a consumer and how this can affect you as a trader, especially if you are trading leveraged contract for differences, because there we really rely on the broker lending us that 80% of the money to take those positions. So if you appreciated this content, please give this video a thumbs up, and if you haven't subscribed, please consider subscribing. I will see you on the next video.